Good afternoon, everybody. Welcome to Trader Merlin for your Monday edition. A exciting Monday, exciting week. And yes, some of you may have noticed the number was wrong on the number of the show. I think we're at 1,064 or 65, but I messed up on the thumbnail for today. But it's okay. Congratulations to the Eagles on a just absolute dominant performance of the Kansas City Chiefs. Hope you guys enjoyed watching that game. Luckily, I was in some football pools, so it made it well worthwhile for me to be watching. It was an interesting one. I did not think it would be that lopsided. So, all in all, a decent game. So, back to trading. An exciting trading week. There is a ton to talk about. We, of course, have Jerome Powell speaking twice this week in front of Senate subcommittees. We also have CPI, PPI numbers. You've got a bunch of earnings, so it should be a wild, volatile week. And, of course, I was really struggling with what to title the show today. Sometimes I try to make them engaging. Other times I'm lazy. And this one, I was just struggling to find the right thumbnail for. What do I want to talk about? Well, more tariffs, more problems. And I should probably say that. Thank you, Daryl. Daryl says, nice title, Merlin. Yeah, I can just say this like Biggie Smalls, right? More tariffs, more problems. And really, I don't know if it necessarily means problems, as we all are aware. It's just opportunity for us, for different markets, different segments will benefit from this. It just creates a lot of crazy uncertainty, right? We just don't really know what the heck is going to happen. So in response to the U.S. adding 10% tariffs to Chinese goods and services coming into the U.S., then China retaliates with the 15% tariff on certain products going into China. Now Trump says, hey, you're going to do that? 25% tariffs on your steel and aluminum coming into the United States. And who knows where it will stop, as will probably happen. It will just get pushed. It'll be used as bargaining chips, and some agreement will happen, and all of a sudden things will start to look good again. So how is it going to impact things? Well, I decided to choose this topic because there was a question from John. And I'm assuming, John, that this was due to those questions. So there's my wonderful graphic. I've got this, steel, rolls of steel here with the kind of mix between the American flag and China. And, John says, thoughts on U.S. steel? Well, we talked about this a couple weeks ago, or actually maybe it was last week, when we had mentioned that Trump said he's going to broker the deal between Nippon Steel and U.S. Steel. Now, obviously, we would like to have an American dominant steel manufacturer. So let's go look at that price chart here real quick. Let's see, I got Alcoa up there, but let's start with U.S. Steel. And not sure why I have that big vertical line there, but I will take that one off. From a technical perspective, it does not look great. We could argue you've got this, series of lower highs coming in, even though it's been making higher lows. It doesn't really give us any clear direction here as far as where it's going to go. Now, to John's point, I think this is why John asked this question. If we do get 25% tariffs pushed, which are supposed to happen tomorrow, I mean, he said this over the weekend as he was flying Air Force One over to watch the Super Bowl. Must be nice. He made that comment that he's going to put 25% tariffs on steel and aluminum from China. What does that do to somebody like U.S. Steel? It gives them a sharp competitive advantage, right? And now all of a sudden, we'll probably do a lot more business in the United States. So if these tariffs do get levied, then sure, I think U.S. Steel would probably be a logical play. Now, technically, this isn't anything very pretty. I don't really like this chart just because of what's happened since November of 2024. It's just kind of been not looking so hot here. So my thoughts on U.S. Steel are, if you believe that these tariffs are going to go through, and you believe that Trump is going to play hardball and maybe go 25, or who knows, maybe we get in a little bidding war here and it goes 25, 35, here I have 45 tariff, here give me a 50 tariff. If they start to pop like that, then one of the big benefactors here will be U.S. Steel for sure. Now, there's other steel companies in the U.S. that you could potentially play. Not a lot. I think Nucor is they're out of Charlotte. So here's Nucor, and Nucor looks actually fairly ugly. It looks to me like the uptrend in Nucor ended sometime around May of last year, and now we're in a pretty decisive downtrend on Nucor. And I'll draw some lines across the top here just to make it a little bit clearer. And we'll just go through the peaks there, make it look like that. All right, so there's your kind of downtrend at the moment for Nucor. If anything, I might be looking at shorting these rallies. I just don't see, buying Nucor right now. And of course, if you looked at the candle for today, you had a very nice little shooting star there on Nucor, which might lead to more downside movement here over the next couple of days. So I'm not liking the chart of Nucor. The only other one I could think of would be Steel Dynamics, which is more of a recycler reclaimer, STLD. And granted, I know there's a lot of other steel companies out there, but they all kind of look the same. They're not really having great success Cenex aluminum. Thank you for that one, Big Eb. CENX. I didn't look at aluminum. Let's look at steel. So you're up 10% today on, and this goes back to something I would like, right? What do you have? You've got a much more predominant uptrend starting that same period of time from right around October of 2023. We've got that series of higher highs, higher lows. Now, granted, this low that it put in back in February, just a couple weeks ago, was certainly a lower low, and that would lead you to believe that we are now starting to see a shorter-term downtrend here for Century Aluminum. But we did break this most recent high. We didn't close above it, but we did break this high from January 21st, so that's a positive sign. And certainly, this would any U.S. aluminum manufacturers would do good. You have, of course, Alcoa. There's your AA, which looks very similar to that chart, but just weaker and weaker and weaker. Yeah, Cleveland CLV. Cleveland Cliffs CLF. I always say CLE. Oof. All right, so here's where it would get interesting for me, and for somebody like John, he mentioned U.S. Steel, which of course has kind of got the lion's share. You have Cleveland Cliffs, which I believe, if I remember when I did the analysis on this one, is more like rolled steel. It's kind of a specialty type. That chart looks the worst of the bunch that we've seen so far. I mean, it was up over $22, hit a low here recently of under 10, down around 925, and now you're currently sitting at 1184. This is one that I would probably be more interested in. I like to go find these ones that have been absolutely crushed, that have just been beaten down, and this thing's down over 50% from its high just in April of last year. So I would be interested in this one, but I certainly wouldn't jump into it without doing a little bit of research first, because clearly there's got to be some reason why this has been doing so poorly. Granted, 25% tariff on any competitor coming from China is certainly going to help it, but let's remember, it's not like all the steel is coming from China. There's a lot of steel manufacturers in other parts of the world. You've got India, you have Russia, you have Luxembourg, believe it or not, has a bunch of China steel companies. So it's not like that this is going to be, it's a 50-50 battle where if we tariff China, then it's a 100% benefit. It certainly would benefit the U.S. companies. And again, for John, you got to really kind of do your research and figure out which one you think might be impacted the most. What I do like about the U.S. Steel deal is you're going to get China or Japan in there with some good capital backing, which may shore up any of the shortfalls that U.S. Steel has. Plus, then you start to get that 25% tariff in place. That could do really well for them. So my thoughts on it are, I don't like the chart, but I do think that if the tariffs get implemented, we could see more upside movement here for steel manufacturers and aluminum. So I think that certainly represents an opportunity. But like he did with Canada and with Mexico, my gut feeling will be that before we really start to get into a full tariff war, things will kind of calm down a little bit. And what we're seeing from Trump, and a comment that he made was, look, if they're going to tariff us, we're going to tariff them right back. So if there's a tariff on a goods and service for us, our goods and services to go to their country, not just China, but any country, then we'll give them an equal tariff on any goods that are coming back in our country in that same vein. It's like, all right, so we're going to have this tit for tat for a little bit, a lot of volatility. I guess question for me personally would be longer term, what do I think of steel? Steel's not going away. We may come up with some synthetic materials maybe that work better than steel in the long run, but for right now, steel is still a major part of construction, building, automotive. So I would put myself in the I'm bullish on steel category. I don't know. What do you guys think? Are you bullish? Oh, no. Thanks, Big Eb. You're going to have to tell me what Jim Cramer recommends, because usually I don't watch Jim Cramer. I see tweets every now and again, because I actually do follow him on X just because I want to see what he talks about. But he recommends buying Cleveland Cliffs, huh? When did he recommend it? I'm curious. Because, we saw what he did with Netflix when he was recommending to buy it like $600 and it fell all the way down to sub $200. Yeah, I mean, at some point, Cleveland Cliffs will bottom out. We just don't know when. Is it in the 20s? Is it in the teens? Yeah, well, we'll get to NVIDIA in here in just a second. That whole kind of tech space, I think a lot of people are realizing that this DeepSeek thing is actually good for NVIDIA. It's just going to cause more and more competition in that space, which is really good. But all right, I'll move on from the steel discussion, and then I'm going to jump to one that I haven't discussed in quite some time. Oh, we did on February 6th. Okay, so we just did it. Fury, you're bullish on steel? I would say I'm mildly bullish on steel. Not aggressively. I would say I'm mildly bullish on it. I do think the tariffs will probably get implemented and benefit the U.S. markets for sure. So here's a segment I don't need to talk about, home builders. And this question was from Kevin. It says, I've been watching Homebuilder stocks fall over the last few months. At what point would you buy? I don't really buy Homebuilder stocks, but let's go and look at XHB real quick. Okay, this is just a Homebuilders ETF. All right, so we can just start there and then work our way back to driving forces for homebuilders. Real quick, Scott said the labor costs and regulations in the steel industry will continue to for the product overseas. Tariff on steel will only hurt. Oh, okay. Well, I mean, will it? It won't only hurt, because if I'm U.S. Steel and my opponent, my competitor now has to pay 25% extra to get their steel here, American businesses may be more inclined to use U.S. Steel. So I think in that sense it benefit. But yeah, we can't compete with the labor cost over there or the regulatory environments, the pollution, stuff like that. And we may see some easing of those regulations as well under Trump, although it seems like now the legal departments of our government are kind of going, hold on a second here, you're moving a little too fast, Trump. You can't do this, can't do this, can't do this. So we'll see if it ends up slowing things down. So let's look at XHB, which is an ETF that represents a bunch of home builders. Now, of course, I don't know all the components of this. As you guys know, one of my favorite resources, things to look for, is going out to bar chart, and you can pull up the constituents or component pieces. So you go to bar chart, type in XHB, or whatever ETF you would like to look at. In this case, I'm going to do home builders, and we'll look at some of the top ones here, which of course will be KB Homes and Lennar. But down on the bottom left, there's a little button that says constituents, and then you have all the components of these ETFs. So you have Williams-Sonoma, Johnson Controls. These are not necessarily home builders, right? Home Depot, Lowe's. There's Toll Brothers. Wow, not what I would expect, but there's KB Homes. You've got Pulte Group as well, and a few others. But you look at the overall trajectory of this one, and it feels like it's slowing down. You can see it's still on an uptrend technically because it's making these higher lows. Okay, fine. But recently, and I'll tell you when recently is for the podcasters that can't see the chart here, I would argue it's somewhere right around December 17th. We kind of broke through some intermediate swing lows, somewhere right around $112. Once it broke down below that, then you've broken that uptrend piece, and at least the strength that was in place, from 2024 is now slowed down a bit and maybe reversing on the other direction. So what we're having now is a breakdown down below that 112 mark on XHB. It rallied, retested 112, and now is selling off again. So you're in a situation now for home builders where XHB anyway, when a level like 101.50 becomes pretty important. Once we break that, then I think you'll challenge these lows right around $98, and then all of a sudden it starts to get lower and lower, and then we can actually be using this as a measuring object to try to anticipate where it may fall to. So overall, XHB, while it's not overly weak, it doesn't look as strong as it used to be. Now within that, I look at home builders as, Toll Brothers for me was kind of the king of kings. They're one of the big guys out there. Now, would I buy Toll Brothers? Actually, yes. If I'm not going to. I'm not really into home builders. The volatility is not just there for me typically, and not my area of expertise. But based off this chart, I would like home builders literally right now. And the reason for it is, you notice this kind of area of consolidation. I'll put a loose demand zone in here, and we are now literally dead center of it. And if I scroll this back, you can see that level between, call it 126 and 123, has just been hit multiple times. Now, granted, it's showing weakness, right? Because this most recent rally we saw in January didn't exceed the previous highs from November, which are right around 160, 168, 169. Certainly, we've lost momentum here, and that's okay. However, the fact that we're in that demand zone, we went almost all the way through it, and we kind of went deep in that demand zone. And if you look for the stop loss on this bad boy, it's going to be down below that demand zone. So, maybe 121 becomes your stop loss. So I'd be okay taking a shot at home builders here for a couple different reasons. But number one is it's significantly depressed price-wise. If we look at where it was just a couple of weeks ago, or maybe a couple months ago, when we're up about $169, you are currently down 26% in a market that is still relatively robust. Now, granted, home builders may have gotten a little bit ahead of themselves, but right now, home builders are starting to benefit. We've seen the 10-year yields drop a little bit, which of course impacts that 30-year fixed rate mortgage, and that may drive more people to buy. The wild card here, Kevin, with regards to these home builders, and we'll look at some others in just a second, is obviously interest rates. In my mind, based off of all the macroeconomic pieces, and Bill Addis, my bond expert who comes on the program, he sees rates going higher. I do as well for all the same reasons. It just feels like we're going to see it higher. If those yields continue to rise, and I'll show you that chart right now so we can kind of see what that looks like. Here's your 10-year, which right now is about 4.5%. It fell down into an area of demand, bounced off that, and we'll see if this continues to move to the upside. If it does continue like I thought it would, well, that will put further pressure on Toll Brothers, right? It'll start to price people out. If you could afford a $500,000 home mortgage at, let's say, 6.5%, well, what happens when it gets to 7.5%? It may not seem like a lot, but that extra 1% on a $500,000 loan can add up to a significant amount of extra interest payment, which people may not qualify. So at a certain point, we may start to price people out of that market. So that's the one big negative piece I see, is the rise of the yields. Now, when you look at what Scott Bessent was talking about and President Trump, they want to bring down the long end of the yield curve. We already know that the short end is controlled by the Federal Reserve. The long end is controlled by supply and demand. Right now, the government is issuing more and more 10-year bonds because they need to sell more, the Treasury is, selling more to raise enough money to pay for our debt, which is ever escalating. Now, granted, what's going on with Musk right now and laying off all these people, all these jobs, it may get a little bit better. Who knows? The amount of debt we have. But for now, they're just continuing to increase more and more and more the debt we have in the United States. So this could be very problematic if it continues that way. If Trump has his way, and Bessent also, and somehow they can finagle it where we manage to pull this yield curve down, or the long end of the yield curve down, then Toll Brothers, Lennar, KB Homes could do very well. All these home builders could do very well. Let's go in more charts of these home builders. Here's KBH. Right, KB Homes is much worse than Toll Brothers. They are down as of right now, 28%, call it 29% since September of last year. Let's look at Lennar. All right, here's Lennar, which is, the weakest of them all. Going back that same peak back in September of last year, Lennar is down 36%. In grand scheme of things, you've just actually closed the gap here. So you have a gap closure. The gap, for the podcasters that aren't seeing this, that gap goes all the way back to November of 2023. We've officially filled that gap. Now, there's a couple more. The big stall point here would be right around $105 for Lennar, and it's currently trading at $122.60. So, no, not existing home sales. Remember, this would be new home sales. Typically, would be their bread and butter. Lennar, I'm not going to worry about the new home or the existing home sales. It would be new home sales, and I can bring that chart up here in just a second. But some of these are going to give you good value, good bang for your buck. I know a lot of people right now are looking for value stocks. Now, maybe this is something that I'll point Larry to and say, hey, check out Lennar. It's down 30+%. Is it a value play yet? Right? Do you see them having more earnings going forward? But for me personally, I can't latch on to a home builder thinking that the economy is going to be great and great. I think there's too many variables here, Kevin, for me to want to jump onto home builders, whether it's the ETF or individual securities. Now, I did see a comment here just a second ago. Banks should do well regardless of tariffs. Lots of merger and acquisition, trading all this volatility. I agree, Big Ev. I think financials will continue to do very well. And also, I do believe you're going to see some rollback of some of the regulatory things which keep banks in line, which is good if you're a shareholder, might not be so good for consumers because the banks might find themselves in a situation where they're taking on too much risk, like Lehman Brothers and Bear Stearns, where they got over leveraged because the guardrails weren't in place. So we put the guardrails in place so it wouldn't happen again, and those may be taken away. Maybe, right? I don't know what's going to happen yet, but Trump has definitely talked about removing a lot of the regulatory obstacles for businesses, period, and he has singled out banks as well. So I definitely think banks will have better performance. It's just a question of, in the quest to get performance, Big Ab and others, let's bring up B of A. Actually, let's look at WFC to start. All right, so Wells Fargo, an absolute fire for the past couple of years. If you look at JP Morgan, Chase, JPM, same thing. I mean, this stock is just absolutely phenomenal. Back here when I wrote that article on JP Morgan saying, here's the 3 stocks I'd buy right now, 127 was that price. I did not hold at this distance. I got out of it with just doing options plays, but it was a nice trade, but not as nice as the overall one if I would have just held it. And then we had BAC, Bank of America, also doing absolutely fantastic. And I think that this is a bit anticipatory. I think this is a lot of expectation about banks and financials doing well. So Big Ab, I think you're right, but I think a lot of that may be priced in as we speak. Now let's see. Fury says, I see it back to the 80s because the tariffs will increase materials, hence drop the building. Okay, yeah. There's a lot of talk about that too. I was joking with a friend of mine. We were talking about how Trump's, repealing all this stuff and pulling back all regulations, and we were saying, we're hearing about lumber prices going to, increase significantly because of what's going on with Canada. Well, maybe he'll just, open up the whole redwood forest in California, and we'll just clear cut the whole redwood forest and just, plenty of lumber. Plenty. All right, let's see. That was me being sarcastic. Please don't open up those national parks. If you have never seen the redwood forest in Northern California, you guys got to go. That's one that, man, you feel like it's like a higher power in there, man. It's a crazy place. Steve says, I'd rather own Home Depot than Home Builders. Just my thought. I think builders are still too high. There is trouble that they're... Steve, I'm 100% with you. Not even a 99. There's no question in my mind. I would rather go with a home building repair store where you're going to get maybe some new construction. But as the market continues to roll forward, I do think you're going to see some economic struggles along the way. Right now, it feels like we've got decent growth. I think that the forecast is pretty clear that we're going to start to get some more inflation. So I would be looking at something like Home Depot or Lowe's, where people like myself are going to say, you know what, maybe I'm not going to go buy a house, but maybe I'll redo my bathroom. Maybe I'll redo something here and add value to my home and make me feel better about where I live, or add on an addition myself and do it locally, as opposed to a brand new home. Do what my neighbor did, which is, take his small home and knock it down and build a monstrosity on top of that, right? That wouldn't be benefiting Toll Brothers and Lennar. That's big tract homes in uncharted areas, if you will, whereas existing home sales would be impacted by improvements and things like HD. So yeah, definitely think home improvement store would, if I had to choose between home builders and home improvement stores, I personally would go with home improvement store. That's just me. As you're dropping regulations on banks, I think they can prove they can't regulate themselves. We've known that. Let's see. Yeah, Calaveras is gorgeous. Oh, our Lennar houses were crap. Would it surprise you, Margaret? When you're a tractor, a mass-producing facility, you might forgo quality every now and again, right? You're just slamming up walls, just mass-producing walls and just slap them into place. Yeah, I could see quality not being the best, especially in the bones of a house. One thing that most people just don't appreciate is the guts, the internals of a home. When I go to someone's house, we all see the insides. We see the finish work, the plaster, the stucco, and you can, as they say, put some lipstick on a pig. My neighbor, I don't know how he doesn't know this, but when he was building his home, there was a massive storm here, and it rained for day after day after day after day, and they had already laid the ground floor, and they put these little nets down on the ground floor, and they filled it with fiberglass, did floor insulation. Smart, got to insulate the floors. Well, it rained for like 4 days here, which for California, guys, a 3 or 4 day storm is epic. I mean, that's incredible in SoCal. You don't get a 3 or 4 day storm anymore. It happened. And his entire downstairs was a little lake. It was a pool for 4 or 5 days after that rain, because they just stopped working because they put tarp over the house, but all the windows were open and there was no windows. It just flooded his house. And that guy's house has got to have some serious problems. We're talking dry rot in the floors because it just didn't dry right away. It had some lasting, who knows what on earth has gone in there. But, you put some nice hardwood floors over it, you won't notice that type of stuff. You can cover up the bones of a house. We have another one coming later this week. Good. I'm ready for it. No basements in SoCal. No. Yeah, that's one thing I don't like about Cal. I love basements. Basements are kind of cool, especially like if you're a musician or something. You can just go down in your basement and rock out with your drum set and the neighbors don't hear you. When I rock out with a drum set, they all know. Merlin, can you turn it down? Let's see. Have 2 sequoias in my family room. Haven't noticed the difference. You have 2 sequoias in your family room? I'm confused. Sequoias are some of the biggest redwood trees on the planet. Do you live in a tree? Take back 1,000 years. There you go. It's funny. In a place I had up north, when I was in 9th grade, it was a wildlife class, and they came in with these little redwood tree saplings, little tiny saplings, like 10 inches tall. And I planted one, and when I left that place in Northern California, I sold in 2016. That tree was it felt like 80 feet tall and still going. Sidelines, the first home was burned. Oh. Sidelines, the first home that was burned in the Eden fire. All right, what else I wanted to bring up here today? So I talked very briefly about home builders, which is great. Merlin, they were trees I planted. Oh, okay, cool. In your home? You said it in your home. I'm thinking that would be kind of crazy to have in my family room. That'd be pretty cool to have trees in your living room, but unless you live in a tree house, that'd be kind of awkward. All right, so we talked about home builders. Let's talk about one other thing here that I think will be getting a lot more attention here soon. I don't know if you guys saw this headline, but Elon Musk is leading a takeover attempt of OpenAI. Now, we know that Elon Musk started in 2013. He started XAI, which, of course, is his attack on the AI space, now to compete with, Meta and OpenAI and a couple and Anthropic as well. So, what does this mean? Well, it was I think it was a 93 or 97 billion dollar takeover. That would be pretty amazing. I mean, that's a huge amount. Remember, what was X was 40 billion. Talking about a 90 plus billion dollar takeover of OpenAI, and the question now becomes, what happens there? Right? Does this go back to a nonprofit and is now used for human good and give XAI a competitive advantage? Does it get rolled into XAI and now give X a monumental head start or leap in front of everybody else, in my opinion? I don't know. But this is going to get very interesting over the next few weeks. Now, this was just tendered. I saw some documents from the lawyers talking about how they just tendered it. They have not received any feedback on it yet. But remember, there's a lot of backers here. You've got Microsoft is a huge backer of OpenAI. You've got this long-standing battle between Sam Altman, who's the CEO of OpenAI, and Elon Musk, both personally and from corporations' perspective, litigation going on. So in my opinion, it's going to get more and more and more interesting as time goes on. Now, on this AI front, we heard a couple weeks back how DeepSeek was going to just upend all these other AI firms and we're doing it really cheap. The reality, I believe, from most people is that the numbers that DeepSeek was quoting, there's just no way. They didn't do that with that kind of money because remember, they're not supposed to even have NVIDIA chips over there, but an insider said they had 50,000 of them. Who knows what to believe either way. What is interesting is now what DeepSeek has done, because it's open source, everyone looked at it and said, oh, okay, we see what you're doing. That is an improvement on our current models. So what we're going to do is we're going to now mimic that with all of our GPU power. So if you said you did it without it, we do have the GPU power from NVIDIA and we'll make those systems even better, which in my opinion means that there is going to be more demand for NVIDIA chips. Now, of course, that is music to the ears of some of you who are still long. Here's NVDA. A nice day today, 2.83% up move for NVIDIA. I have options that are expiring on this one on Friday, so I'm not worried. I just have the 108s. I sold more puts last week for the 108 level, but I won't get hit on those, unfortunately. So you had a nice big rally today, 2.87% for NVIDIA, and a lot of the mega stocks, a lot of the Magnificent Seven stocks were looking. Let's go bring it up here. Looking pretty good. Right, the only one that seems to be really hurting right now is Tesla. You had NVIDIA was up almost 3%. Amazon's 1.74%. There's your Amazon chart, which still looks absolutely fantastic. I mean, Amazon since August of last year is up almost 100%. Pretty phenomenal. Microsoft, of course, one of the biggies in that AI space. While they're investing, and we're hearing a lot about CapEx spending, their chart does not look so good. I mean, it really has just been oscillating back and forth for the last year and a half, even though it's still doing well price-wise. Just kind of, not that great. Google, another major player in that AI space, gapped down into where I was interested in selling some puts. Luckily, I did not make that trade that day. I think I was back into something else that day. We've now broken that one and came right back towards closing this gap. The cliff, if you will, for this Google trade is 184. 184. That's your next stop point. After that, you'll close this gap, which is all the way back to a price of, what, 177. There you go. Meta, still continuing its unbelievable ascent. Let's see how many up days this thing had in a row. I guess I could go back and count all these, but it's like 15 up days in a row. Phenomenal. You don't typically get that. You don't typically get that with Meta. You get, a few up days, but that is just a phenomenal move up in Meta. Over the past couple of weeks, let's just go back to this low point here on January 14th to where we are today. Meta is up 21, almost 22% in the last 18 trading sessions. Phenomenal move. So they're doing really well. Apple as well had a positive day, or we'll call it a break-even day, but its chart not looking so great anymore. Just kind of not really going anywhere. And then, of course, Tesla. All right, there's your Tesla chart. At some point here, Tesla will be a buy, but I think you've got more downside movement here. I think there's going to be a little bit of an exodus against Elon Musk from certain people. I know some people now are turning to really dislike Elon Musk and just polarizing, particularly now with this whole Doge business, and a lot of people are upset about that. So that could certainly be another play later on, whether you're shorting it or looking to buy lower. I wouldn't short it just because I don't trust it, but I might be looking for a long-term accumulation. Certainly if it got down to $250, which is $100 less than where we are, I would be entertaining that one. And Margaret says, take a peek at IBM. Yeah, I mean, hard to knock IBM and their Watson AI. From a technical perspective, though, you are ready for a fall. Now, we had that big gap up on their earnings back on January 29th. I normally would do my line right from the opening price, but let's be conservative and put it down to the low here, which is exactly where we bounced. The low price on January 30th, when they reported their earnings, the low was 247. Today, their low was 246.87. So just barely tiptoed, but didn't close below it. To me, I would be anticipating this starting to sell off a little bit and closing that gap. It's one or two things, folks. It's going to hold this level at 247, or it's going to start to close that gap. And I would put on closing the gap myself. Now, not instantly. It'll take a little bit of time to get there, but yeah, it looks pretty weak. And then Mick. I don't have my popcorn trade of the day, so this will have to do where we have the a guy here with a bowl of popcorn looking all excited. This will be me tomorrow morning. Now, you guys know I've been talking about this SMCI trade that I've been in, and man, it happens all the time. I'm sure this has happened to you, so now you get to see me, how I deal with it, where you're in a trade, you get to your profit target, does what you think it's going to do, you do well, and you get out. And it'd be one where you've, had a pretty significant gain. And then as soon as you get out, it just goes absolutely gangbusters, and you're left just like holding your head in your hands going, why did I get out? Look what happened to SMCI. Now, SMCI reports earnings tomorrow after market close, and I really want nothing to do with that. But I had sold calls against I had 6,000 shares of SMCI. I had sold calls against it at $34. I have 3,000 of those expired last Friday, so now my position is down to 3,000. I still have 3,000 shares, but I had the $34 strike, so they'll disappear. Those expire this Friday. So I was happy to get out of my SMCI before the earnings. I just don't trust it. But look what happened today. I mean, you were up $6 per share. If I just held it, it's another $18,000 for a company that was on the chopping block of potentially being delisted from the exchanges because of their bad earnings. They just couldn't find an auditor. Now they got an auditor, and everything seems to be okay. So Oliver's like, what in the hell? Yeah, what's the catalyst? I believe it's expectations. They're going to post some real rosy numbers. Remember, these guys are taking and fine-tuning systems for AI. And when all these chips are sold, they'll come out there and they'll set your system up for you and help you do the networking and stuff like that. That's part of what they do. So I think it's just knowing that there's so much CapEx spending, that AI is not going away. And now, because it was so downtrodden, I mean, look at the chart here. If you looked at it just here, you'd say, wow, what a great stock, this thing's ripping. Remember, it's a lot of down move. I mean, this thing was up at its peak I'll get to the exact number, 122 was its peak. And that was just going back into March of 2024. So in less than a year, it fell from 122 all the way down to a low of 17. You're talking a almost 90% slide in price. So this thing was on a fast track to zero. I mean, it looked really ugly. And now, looking a lot better. Now, I think that this is just expectations about their earnings tomorrow. We'll see. Just to spite me, what's going to happen? They're going to report earnings, and this thing's going to jump up to like 100. And I'm like, man, I got out of 6,000 shares at 34, and it's now at 100. Is what it is. I looked at my rate of return on it. I'm totally happy, stoked on it to have gotten the rate of return that I got in the short window of time. This was less than 2 months, and it was a 25% rate of return. I'm totally fine with that, right? If I can continue to stack rates of return like that, I got to just not worry about what happens this one. It'll be fun to watch tomorrow. It'll definitely be this type of trade here where we're just sitting there all excited watching the earnings announcement. Could be kind of a wild one. Let's see. What do you guys think about it? That's a lot of gaps on the way up on SMCI. Yep, absolutely. You got the 43 call, 44 expiration. September. You're going way out. Okay. Possibly legal action against Ernst & Young coming. I don't know. That's a little bit better spread. Nick, you might get a little more premium on that one. I don't know if they'll go after Ernst & Young. An auditor can walk away, but possibly. There's too many unknowns with this one for me to feel comfortable. I mean, I'll be honest, I wanted to get out of all my stuff on the 7th, last Friday. But when I did it, I sold a block of 3,000, and then I tried to sell the second block of 3,000 or 30 calls, and it just didn't exercise me. So I bought the next week out, which is of course expiring this Friday. And as Big M says, you might be feeling pretty good if it tanks, though. Yeah, sure. What would I love in a perfect scenario? What would be great for me is this thing tomorrow continues to rally and hits $48, $49, and everyone's like, yay! And then they report earnings, and it just an absolute implosion. It goes back down to $33.99. That would be la creme de la creme. That'd be the ideal for me, because then I get to keep my 3,000. I'll sell at the money calls at $34 strike again and collect probably 12 to 15% for the week and start that whole process over again. So 25% rate of return on the first 3,000. The second half is a lower rate of return because just the timing of those. I got different prices. So there you go. We will see. Why don't you close the trade and keep your shares? I don't know, Les. Why bother? I'm anything above 34. So here's the thing. If I were to close my trade, if I was to buy back the puts that I sold, let me start over again. If I was to buy back the calls that I sold against my position, and then they have horrible earnings and gap down to $34, what happens? I'm going to lose all of that gain. So I'd rather just let it pan out. I'd definitely rather let it just do what it does. If it gaps up and goes to $500 per share tomorrow, I'll just laugh and go, oh well, I did okay. If it craters tomorrow, then I may still have the shares at $34. But now, given how much it's rallied up, for it to drop down that far, even from like the level today to get to 34, you're looking at a decline of 20%, which could easily happen. You could roll them up and out a week and get some additional premium. Yeah, I could. Absolutely right. Yeah. We'll see. I mean, I've got a few other trades on right now. I did sell some calls on the IBIT. I'm tracking that IBIT portfolio that I'm doing for the trade year, and didn't get a lot of premium because I sold the 5950s. It was only 10 cents worth of premium on those options expiring Friday. But, oh well, the fun of it. What else did I have here? That's what I had. All right, so I'll run through our top 8 here, and then we'll wrap up for the day. If you got something you guys want me to dissect, let me know, or at least bring up here. All in all, a pretty darn good day. All of my top 8 market indexes that we look at on the show were up. The weakest performers were the dollar and your 10-year. The dollar was only up in yield 0.18%. So all in all, still feel like there is this nice shorter-term downtrend, which started back in January 13th. And we've just been drifting lower ever since. This would bode very good for those housing stocks if this continues to get lower and lower, and Trump would support that because he wants a week-long end of the yield curve. Now, I do think at some point this will start to bounce and move back to the upside, but for now, looks good down. Dollar index, sideways to chop for the past 2 months. Nothing exciting here. Go through my top 6 crypto charts. Okay, we can do that. Russell 2000, nothing really exciting here. You have what's called, this is actually called a piercing line formation, which is supposed to be rather bullish. If you look at Steve Nissen's book on candlesticks, piercing patterns where you have a really big red day like you did here on Friday, and then today a big gap down and then a rally up which closes somewhere within the previous real body. So this is called a bullish piercing formation. This is generally one that moves to the upside. We'll see. Fury says a head and shoulders on that 10-year. Yeah, I got that mapped out right there. You can see the little faint head and shoulders line there. It started to work okay, but boy, still a long way to go to get to actual completion of this. It would need to fall all the way down to, oh, actually, that's not right. It needs to fall all the way down to 4.24% would be your completion of that head and shoulders pattern. All right, S&P. This is more than a piercing line. I mean, it pretty much erased all of Friday's declines, which is great, but technically we're just chopping. It's just chop, 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 back and forth, sideways, no real clear direction at all. NASDAQ has a similar picture where we've really just been stuck sideways. Let me get rid of that downtrend channel, and I almost feel like I should draw a yellow box around this, but there's no real clear direction here. It just feels like things are like, meh. I don't know. I'm not happy with what's going on with our broad market indexes. Our top three, speaking of happiness, gold continuing its absolutely stunning rip to the upside. 2,934 for gold, 1.62% gain for the session. And I would show you what's on the left-hand side of your chart, but as you know, it's nothing but blue sky. Gone. It's just straight up. Bitcoin, 1.76% gain today, but look at the chart. Same thing as we were looking at the NASDAQ and S&P. It's almost like they're chasing each other. They keep trying to break through all-time highs, but just can't seem to do it. So kind of an ugly chart. As long as you stay above that yellow box, I think we'll be okay. Yeah, my IWM position, 208, I believe. Yeah, I had the 208 strikes, but I sold, those are monthlies. I sold those last month, so I got another week and a half. Those are expiring on the 21st. So I think 208s or 210s. I could check, but I'm pretty sure it's the 208s for the IWM puts that I have. But again, that's my monthly, 1% per month target, which is way out of the money. I don't think we'll get down to 208 by the next couple of weeks. If we do, okay, fine. But yeah, I've got a pretty decent size put option on that one. And lastly, crude oil. Got a little bounce, 1.86%, $72.32 per barrel. Who knows, maybe global tensions and tariff wars are going to start to heat this up and get that oil price moving a little bit to the upside. But for right now, I still am longer term believing we are going to see more downside in the crude oil chart, albeit fine. We got a little bit of a bounce here today, but I think you're going to continue to see this one work lower and lower and lower. And yeah, that's it. Let's see. Steve says, if they get rid of the penny, how will gas always end in 99 cents? Yeah. You know why? I'm telling you, you're going to see physical money disappear. They will have pennies, but it'll all be digital. Because once you go digital, you don't have to print them. But yeah, get rid of the penny. I think we'd all agree the penny is kind of a useless thing. Just get rid of it. Not useless, right? It's just, if you're paying more to manufacture it than what it's worth, then you should get rid of it. You should not be. It's a bad business. It's a failing business to make a penny, so get rid of them. Who uses cash anymore, Steve? Yeah, we're pretty much all electronic. I did a bunch of betting on the sports games this weekend. That's like where you use your cash. Right? You use your cash for that type of stuff. And let's see. You want to know my top? I don't know if I do top 5. Let me run through just the markets that I'm interested in. There's certainly all kinds of stuff happening in crypto. We've already looked at Bitcoin, so that's one that's out of the way. This is one that we did some research on as a class, Near Protocol, and just looking at what Near is doing as a layer 1 blockchain. Very fast, parallel processing, sharding as well, which our technologies allow this thing to do parallel processing and can get up over 100,000 transactions per second. So I'm interested in this one. I don't own any of it. I'm just kind of looking. I thought maybe if I got down around the 270 mark, I might buy some. We're currently 320, but there you go. It's not 15 cents to make a nickel too. Yeah, just physical change, not good. Too much. You look at their Ripple chart here. You guys know I'm not a big fan of Ripple. I think that this is just a business. This is not in my opinion, this is not a crypto business. This is just a business. It's just a business that's using cryptographic technology. But all right, Naum, you love it. Good for you on that SMCI. I'm happy for you. ETH is an interesting one. ETH right now has the largest institutional short position in the history of Ethereum. There's more institutional money short on Ethereum per various sources than ever in history. And I'm just thinking the mother of short squeezes. Come on. Let's squeeze these bad boys out. Let's get this thing to rip. Right now, Ethereum is struggling with their scaling. They're just not scaling it as quickly as they should. I do think you'll probably see this continue down, but you do have some nice demand zones right around 2,400. Monero was a great one today too. You have a nice uptrend on Monero. These are privacy coins, and you can see back to 2024, it's done really well. It's up over 100%. However, with privacy coins like Monero or Zcash, what I think we're going to get here, guys, is a wave of different phases for crypto evolution in the U.S. Number one will be the first thing that happens will be rules for establishing stable coins. And what will be the rules for stablecoin? Maybe I should just do a show on stable coins and what they are, how they work, and how you guys can make yourself $1 billion a year with a stable coin. Then there'll be those rules, and that will weed out a lot of the bad stable coins, which there are. There's different technologies with regards to stable coins. And once we get that done, then I think what will happen is we'll start to have more of a framework around what's securities and what are not securities, right? We'll start to get that segmentation of this is a commodity-based one like Bitcoin, or this one here like Ethereum might be more like a security because there's an organization running it, expecting to make profit from it. So we'll get that segmentation. And then what they will do is they will go after meme coins and these types of things. I think they should do that earlier. You guys know David Portnoy created a cryptocurrency that's up like millions of percent already. And it's just, when you got millions of followers, it's easy to create a crypto that takes off like that. And then the fourth piece will be privacy coins. When you hear someone like Elizabeth Warren talk about how drug dealers and terrorists use Bitcoin, you all should laugh and just say she's uneducated at that. She might be very intelligent in other areas, but she has no clue what she's talking about to say that Bitcoin's used by drug dealers and terrorists. It's 100% trackable. What you should use if you're ever doing anything illegal like that is you use Monero. You use Zcash. Those are completely anonymous. You won't know who sent what to whom. It's all encrypted through specific encryption properties. At a certain point, I think that the U.S. government will say, no, Coinbase, Kraken, Binance, Gemini, all of U.S. exchanges, you cannot list any privacy coins. Just from security concerns, we don't want it. And Coinbase will fight it. And the U.S. government will say, you can either delist them from your exchange or we will shut your exchange down, like they did in Canada. And Coinbase is going to go, okay, we'll get rid of Monero, we'll get rid of Zcash and other privacy coins. So I expect that to happen, probably not this year, but next year when they cramp down on privacy coins. So as strong as this looks, I would be very inclined to exit my position. I actually do have a bunch of Monero that I bought in 2017, so I'm very happy with that. But ultimately, I think you're going to want to watch out for these ones. Other ones I'm definitely a fan of, and it's just kind of been odd trading, is Solana. You guys know I'm a fan of Solana. It still has an uptrend going, although it's not a very strong one. I do like Solana from the uptrend. I think you do have a buy point literally a couple days ago as it came back down into that 185 mark. Now you're at 200. If we get some nice momentum here, we should be back at 260 in no time. So there's just a quick run through of some of the charts I like the most. And cryptos that I like the most, really going by project, not necessarily a chart formation. There's all kinds of, like Tron. I have a bunch of Tron, but really hasn't done that great over the past 2 months. Great stuff. Merlin, if you have $2,500 to stick into crypto dark horse, what's your pick, or do you just stick it more into Bitcoin? I think you're not going to get the 100x type stuff with Bitcoin, right? You're not going to get the 100x. So if you're looking for monumental gains, look, I would probably take, if I was to split it, I would say I do 1,000 Bitcoin, I would do 1,000 Solana, I would probably do 300 in SUI, S-U-I. And the only reason I like SUI is it has such institutional adoption. They have big money behind it. And I'd take that last 200 and I would just do flyers. I would go out and I'd just, find yourself your, Trump coin, your Melania coin, and just try to time that garbage and get a nice bounce of, 300-400%. I mean, if you look at Trump coin, this thing is going to zero eventually, but for now, it has pretty wild swings. Gotta look at this chart. It's just so great. It's so great watching people on social media try to convince people that this thing's going to $1,000. Like, you guys, how dumb can you be? How dumb there's no nice way to put it. But, these are some pretty significant intraday swings going on in Trump coin. This is just back from yesterday. You had a low point of $14, it rallied up to $16. Those are good swings. Now, there's other ones. I don't know what Portnoy is. I don't know what the name of Dave Portnoy's is. I think it's Barstool, B-A-R, Barstool Presidente, B-A-R-S. Yeah, I don't know. But it's the Barstool Presidente token. And really, what I would be looking for is, there's certain social media people that when they tweet something out or exit out, and you can't say tweet anymore, they have millions of followers that just jump on it. And that might be fun to play for a little while, but I wouldn't put any money in there that I was worried about losing, because most likely you'll be the last one to get it, and you'll be left holding the bag. That's typically the way that works. XRP is all over X. Yes. Is it Jail Stool? I thought that was just the mockery, Jail. I thought that's the one that... Oh, here you go, Jail Stool. And it's on Kraken now. Yeah, I don't think this is it. This isn't it. Maybe just listed JAIL. Let's see if there's an earlier one. Oh, here you go. Yeah, so I don't know what it initially was created at, but its high point has been $1.11, and now you're already down to 6 cents. That's crazy. Thank you, Kenny. Appreciate that. Yeah, I would maybe, if you want to, just play around and do stuff like that, but you're really just trying to hit a home run when, to be honest, by the time you hear about it, someone else, you're the one who's holding the bag. That's typically the way these pump and dump schemes work, unless you're connected with the people who actually created it and like, okay, we're going to go live in 5 minutes here, buy yourself, $1,000, $10,000 worth, and then boom, it shoots up. But that's how I would separate it. I think what you're going to start to see is institutions questioning. Oh, there's Fartcoin is another one. It's just stupid. Crypto is, in many cases, is stupid. Here's Fartcoin. Come on, man. Fartcoin went from, this is a 5 minute. Let me go into a daily here. And obviously this has no utility. There's no value at all to this. This thing was back at a penny in November of last year, or October of last year, and reached a high price of, looks to be around $2.48. Those are the types of things you can get on these stupid meme coins. Just be careful with them, and don't put all your money in it. For all of you, I think you guys understand my approach. I am no longer the get rich quick guy. I'd rather be the slow and steady that's going to just grind away, and may not be pretty, but I'm going to get to that finish line in a much better place. Whereas you trade Fartcoin or Trump coin or Pepe coin, you're going to have ulcers. You'll have ulcers. You already have Bitcoin. Well, look, if the future, the dominoes fall in place, which it feels like they're starting to, right? It's a slow process. To get something, I think there might be an eagerness on the part of everybody in Bitcoin that it has to get adopted globally tomorrow. You understand the magnitude of this, right? You're introducing a payment system, a monetary system into every fiat country in the world, plus every country in the world. There's a slow adoption time there. Does that take 5 years to get implemented, 10 years? I think that there's certainly a real possibility that more and more people are going to use Bitcoin. And the fact there's only 21 million, I would say you're probably safer, Steve, just buying more Bitcoin with it and just stockpiling it. Get yourself get a whole coin. Get yourself whole coiner status. And then maybe other networks like Solana, because Solana will be the ones that institutions use, right? What you're going to get to we're going to get to a point where somebody like New York Stock Exchange, NASDAQ, CME, let's just take an exchange, right? They are going to want to list all of their securities on blockchain. So will they use Bitcoin, which is a block time of 10 minutes, is relatively slow? Probably not. They're probably going to go for something that's going to be doing, 50,000 plus transactions per second, something that can go way faster than Visa, handle high frequency trading and all this type of stuff. And that might be SWI or Aptos or EOS even could potentially be a suitor there. So, to me, you kind of have to look and see what do I think the projects are, right? What's going to use this technology, and let me position for that, which is why I do own Solana and some of these other ones, because I think scalability is an issue. But I do think Bitcoin will be that store of value that will be backing countries, central banks, companies. I mean, I think it's going to get better and better. All right, let's, holy cow. See, I did not, here I was like, 30-minute show, Merlin. You're doing a 30-minute show today. No, here we are. Let's go look at your earnings calendar and mainly your economic calendar, because over the next couple days, we'll start to see more and more stuff. Tomorrow, you have the first of 2 testimonies. You guys see here, Jerome Powell will be testifying. This one, the first one, will be at the semi-annual monetary policy report. That's in front of the Senate Banking Committee. That will be at 7 a.m. California time, which means 30 minutes into the trading day. This can create a lot of waves. You can watch, you can log in and see all this stuff go on live. He will be broadcasting this one live. I will probably be watching that one. And then CPI is on Wednesday. Yeah, they said weed. Wednesday CPI and Thursday is going to be PPI. Wednesday you also have Jerome Powell testifying again, but we'll talk about that one a little bit later on. And let's go out here and look at your earnings calendar, which I have not pulled up yet. You do have some names reporting. Today you had Mickey D's, which reported inline earnings and was up 4.8%. Also Vertex reported and they're down. But tomorrow, some bigger names, I think. We have oil and gas. You've got Coca-Cola. You have S&P Global, Shopify, Gilead Sciences, Welltower, BP, DoorDash, for some of you who spend a ton of money on delivery fees, which I just don't understand. And then you have Energy Transfer, another energy company there. Can you type on the chat the crypto coins you like, Merlin, please? Sure, I will do that. Stick around. I'm just going to wrap this one up and I'll type in a few that I like. Again, these are not financial recommendations. You got to do your own due diligence. But as far as, I'll mention the ones I just discussed that we looked at the charts there, but that'll do that. All right, if you guys have anything you want to discuss on tomorrow's show, let me know. I had someone asked me, when will prices decline? When are prices going to go back down? And I thought that was kind of an interesting one, but I wanted to kind of build a bigger show around that. But that might be our show topic for tomorrow. But if you have something you want me to discuss, let me know. Email me, tradermerlin@gmail.com. It's on the screen right now. That said, thank you guys so much. I will see you tomorrow.